Musqueam, Squamish, Tsleil-Waututh, and Coquitlam nations. And Carfax, as a national association, we represent professional artists from coast to coast to coast. And so a lot of what we do is about helping to advocate for artists' economic and legal rights, and providing industry standards on what artists should get paid for exhibitions and reproductions and other services that artists provide. We provide a lot of business of art kind of training, which is why we're really pleased to be co-hosting this today with the government of Yukon, which we've been working in partnerships with since the fall. And so yeah, we're a membership association. If you're interested in joining, or if you have any questions about Carfax or the services that we offer, I'll just put my contact info in the chat. And yeah, I'm looking forward to hearing this great conversation. So thanks for joining.
Yeah, and part of that collaboration, the government of Yukon is paying for, if you want to become a member of Carfax, there's the Yukon, you can contact the Garnet at the Yukon government, or contact me and I will send your email to her to become, they're willing, like it's part of our collaboration, to pay a 1-year membership. It started last September, so there's still, if you want to be a member for 6 months, it's still possible. And also I forgot to say that the session is being recorded and it will be available on the Yukon government website for a period of 2 years. That's where you can find all the other online workshop that happened the last 2 years that with the Yukon government. And now Tova Epp. Tova Epp is from Artbooks, and she's going to show us lower down our level of stress with taxes. And she's been working for that organization for more than 15 years. And in her bio, it says that she's a tax preparer, an actor, and a wildlife rehabilitator. So Tova, I'm giving you the mic.
Awesome. Thank you, Mary-Ellen, and thank you to April. And thank you to everybody who's joined us instead of watching a hockey game. Or maybe you're watching a hockey game on one screen and tax on the other. That, you know, that's allowed, I would say. It's a big night for Canada. As Maria-Ellen said, I'm Tova Epp. I've been working at Artbooks for, I think, 16 or 17 years now. And we're going to talk tax for about an hour, and then we're going to have a nice Q&A session. So if you have questions that come up during the course of the conversation, keep them, hang on to them, write them down if you want to, because we'll do a good Q&A, and I might be hitting your topic as we go, because I've got a lot of topics to talk about in the next hour. We're going to be moving fairly quickly because there's a lot to talk about with tax. I won't be able to answer questions that are really specific to a person's tax issue generally. So if you have a question that's all about something very specific to you, it'll be harder for me to answer. I'm going to be talking in sort of broad strokes today. If there are questions that are more specific that I can answer, I will, but I can't promise anything, because without seeing people's numbers and stuff, I don't want to give tax advice that could hurt somebody long run. So just bear that in mind. It's going to be a general discussion of tax, but it's a pretty thorough discussion, I think, of arts tax-related situations. I'm going to share my screen. We're going to look at a PowerPoint. You won't be able to see me, I think. I've never used Teams for sharing screen, but we'll work it out, and I'll start the share now, or in momentarily. Here we go. Here we go. So we're going to start the slideshow. Okay, so welcome. And this is a little bit about me. As Maria-Ellen mentioned, I'm an actor, I'm a tax preparer, and a wildlife rehabilitator. I got into doing tax because I came out of theater school and had no, whoopsie, what did I just do there? I had no information. Can you guys see the PowerPoint? Hopefully you can.
Yeah.
Good. Okay. All right. They don't teach you about your tax in art school. And because artists are generally sort of forced to be freelancers, it was tough to get out of art school and realize that I had to worry about things like receipts. So I had a boss at the time who worked at a theater who said, go to my account. And that was Artbooks. And that was in the 90s. And I was a client, and now I've been working there since 2009. So however long that's been, 16 years. I'm an actor. This is a picture of me on Kim's Convenience. It was just one line, but it was Kim's Convenience. And I volunteered and then worked at the Toronto Wildlife Center for about 7.5 years. So I wear a lot of hats because acting there's few and far jobs in acting. There's much more stability in tax. Tax is my side hustle. Like people work in restaurants. I'm an actor who side hustles in tax. This is Artbooks. This is a bit of our home site. We've been around for over 30 years and we talk to artists. And what's great about Artbooks is that pretty much every preparer at Artbooks is also an artist. There's a handful of musicians who prepare tax. There's me as an actor. There's a couple of people who work behind the scenes in film. There's a music manager. Everybody who works there has a hand in art. So we can talk to our clients, hopefully with their own language, which I find so important because tax is so scary. It's the scary, confusing place. And when you're sort of forced to be a business because the government says so, just a lot of disconnect for a lot of people about tax. So regardless of how you do your taxes, it's important to find somebody who understands you and your business when you're doing your taxes, because not every accountant speaks artist. And you want to advocate for yourself by finding somebody who understands and speaks artist to you. So before I get into the main topic of conversation, well, actually, usually I do this and I can see people, but I'm going to skip that. I'm going to move on. Know your deadlines. It's the most important thing you should know about tax. A lot of people get confused about tax deadlines because I can't see your faces. I don't know what age group I'm talking about. I oftentimes talk to students who have no idea about tax filing deadlines. So this slide is in there for that reason. Hopefully everybody there knows that your deadline when you're a freelancer is June 15th. So everybody's filing deadline in Canada is April 30th. However, if you are a freelancer and you're filling in a freelance schedule, which we'll talk about on the next slide, you get until June 15th to file your taxes, as does your partner, common law spouse, whatever, as long as your filing is common law or married. They don't have to be freelance as well. They have to, but they can file to June 15th without penalty because they are connected to a freelancer. So know that if you're filing late or at the new deadline, your partner can as well, so you can file together, which is important and really helpful. We're given an extra 6 weeks by the government to account for all the bookkeeping we have to do as freelancers. So it's really nice to have that extra time. However, if you owe money, you still have to pay by April 30th. So that's the tricky thing about how we deal with tax and money as freelancers. We get that really great deadline of June 15th, but if you owe, you have to pay by April 30th. Non-negotiable, you have to pay by then. And so oftentimes people can't get to the April 30th deadline. They've got to file in May and you don't know what to pay. You think you're going to owe. All you have to do is just sort of, you can make a guess, an educated guess based on maybe it's what you made last year. If it's the same as this year, send them what you owed last year. If it's less, you have to just sort of look at your income, assume 15 to 20%, and send it to the government if you have no way of filing by April 30th. Whatever you can send to them in advance, they just hold until you file your taxes. And if you file and you've given them too much, they will refund you the overpayment. And if you've filed and underpaid, they will only charge you interest on the portion that you underpaid. So if you owed them $10,000 on April 30th, you filed on June 15th, and you'd only given them $9,000, you're only going to pay interest on $1,000, which is significantly less than paying interest on $10,000. So whatever you're worried about, the key components here are file on time and pay on time. And those don't always go together, but you do your best. The government just expects that we will make a reasonable effort to do the right thing. And that's all we can do. And they sort of love to bandy about the word reasonable when it comes to tax. So the Canada Revenue Agency, I'm going to call them the CRA, they often use the terms reasonable and expected on their websites because Canada is a what we call a self-assessed tax system. We tell them what we think we owe. They look at our taxes and they can say yes or no, or maybe we're going to get back to you in 6 months. So we tell them what we think we owe, and then it's up to them to agree or disagree or ask for more information. And it's up to them to do that. And sometimes the information that they ask for seems silly to a person who's, who knows their business really well. But you have to remember that auditors or reviewers aren't artists. And so sometimes they need a little bit of hand-holding to understand your business. But just know that if you're reasonable around tax, they can be reasonable to you. So paying on time, filing on time are two of your best tools to keep on the good side of the CRA. And even though the CRA isn't always nice to us, it helps to be nice to them. It doesn't hurt us to be nice to them, even sometimes if we want to reach down the phone line and give them a good shake. Don't do it. Try to be on good terms. I'm just thinking about all the times that I've wanted to reach through the phone and give a CRA rep a good shake. It happens. It's not fun. Taxes aren't fun. So paying online and paying on time and filing on time are both really good ways of remaining on the good side. And remember that when you file late, they assess a penalty on late filing. So if you have until June 15th to file, the penalty starts on June 16th, and the penalties will rise the more often that you're late. So if you are late 1 year, they'll probably charge you 5% of what you owe. If you're late a second year, it'll be 6%. If you're late a third year, you might bump it right up to 10%. I've seen it go as high as 17% for a late filing penalty. So late filing is actually more costly than late paying, because late paying, it's a straight interest, which at the moment is 5%. CRA are within their rights to change it quarterly. I've seen it go from 1 to 5% in the last 15 years, but it's stuck at 5 for quite a while. So just know that late filing is more costly than late paying. Something to keep in your brain when you're thinking about your tax plan. Communicating with the CRA, as I said, it can be difficult. If you haven't already set up My Account, which is the first purple line there, really, really handy to have a My Account, because in there you can submit documents to them. You can also find copies of T-slips that you might be missing. So the CRA will get copies of T4s and T5s, tuition slips, RRSP. So if you're missing something, you can always check with the CRA. The portal that they have is not always up to date. So right now, it being February 20th, I wish it was June. It being February 20th, they're not going to have all your T4s. They're not going to have probably anybody's RRSPs. It takes a little while. If you're waiting for the CRA to get information uploaded, you're going to probably be safest to look around the end of March to really make sure they've got everything. Specifically, things, investment income, T5s and T3s are not mandated to be issued until end of March, which can make filing your taxes complicated. If you have any kind of investment holdings, you might not get your reporting slips until the end of March. And if you want to do your taxes in March, you might be stuck waiting, which is a bummer. It's a misconnect in the system. There's not much we can do about that. But just know that if you're missing something, setting up a My Account is a really handy way to find things. And if you have an HST number, using your My Business account is essential to dealing with HST. HST we're going to talk about towards the end of the session. We will talk about it, but just know that having a My Business account is really, really essential to paying HST and checking your HST status. So if you don't have a My Business account, but you have an HST number, I encourage you to do a My Business account. And the login is the exact same as the CRA My Account. You would log into your My Account and then add a new account, which would be your business number. And then you can administer both your personal and your business from one login. It's really, really handy. This is basically what the portal inside of your desktop looks like for My Accounting. As you can see, the very first item on the right-hand menu is your tax information slips. So that's really the most important thing to know about there. If you're looking for that information, is knowing that you can get your T4 slips. Also, your account payments and balances, super important. Where your tax return status is at. You can get your notices of assessment, benefits and credits. You can find your limits for TFSA contributions, RRSP contributions. If you're eligible for the Canada Child Benefit, there should be information in there. You've got a lot of information in your My Account. So I encourage you to use it. CRA is phasing out paper mail, and they're going to be wanting to do it all electronically through your My Account. And something to remember, we've all been probably on the receiving end of a scam phone call from the police telling us that the CRA is reporting us as criminal and the police are on their way, which we know is a scam. But also CRA will never email you financial information. If you have a My Account set up and you have electronic mail as your preference, all that they can send to you is an email saying, you should check your portal, there's mail for you. So if you ever get a mail from the CRA that says something about you owe money, or we want money, or here's some money for you, it's a scam. Just bear that in mind. So how taxes work. The main thing is, as I said, we want to be reasonable in what we're doing. So bearing that in mind, we're going to be filling out a form called the T2125, which is a statement of business income. That is what we do as a freelance artist. We have to fill in this one schedule. So the schedule is the T2125, and every personal tax return, they're called T1s. So everybody's personal tax return has a variety of schedules, schedules 1 through 11 or 13. There's a bunch of schedules. There's a bunch of other documents, and the T2125 is just one of the other schedules that we fill in to add to our tax return. So it's just one form that sort of encompasses our entire business. And we need to report our gross income on the T2125. And by gross, I mean your full proceeds. So if I sold a painting for $10,000, my gross income is $10,000. And then within the schedule, I have the option of claiming the expenses. Maybe I paid my gallery, and maybe I bought some art supplies, whatever that comes to. If I made 10 from selling the painting and I spent 5 to make the painting, the net income will then be 5 because I made 10, spent 5. The remainder of the 5 is my net income. That's what I pay tax on. And all of your taxable income is added together to figure out what your total income is, which is one line of the tax return. That is sort of, it condenses all of the investment income and T4 income if you have a day job, rental income, net business income, all of that becomes a lump sum for net income, and then or taxable income, and then we will go through the next chunk of the tax return is deductions. So things like childcare, RSP contributions, and medical expenses come next before we figure out what your tax bill is going to be. But it's important to remember that you have to add a bunch of different income streams generally, because most of us have survival jobs. And so the T2125 is just one of those lines. And what is most important that we use for our taxes is the net. So we have to report the gross because we need to tell them what we made, and then we get to write off the cost of running a business, and the net is what we're paying tax on, which is all calculated on the T2125. Because, I'm going to just grab some water, because the world has changed in terms of how we make money, there are some disconnects about what we actually consider taxable income. So we'll talk a little bit about what we need to pay tax on. Obviously, employment income. So if you have a day job that withholds tax, CPP and EI, that's a day job which would give you a T4. Maybe that's a side hustle. Maybe that's your support income. That obviously goes on your tax return. There's a big misconception about grants. I hear a lot of people say that they're not taxable, or that you don't need to put them on your tax return. And those are wrong. Those thoughts are wrong. Grants are taxable. The idea that behind people saying that they're not taxable is that typically when you're writing a grant and you're creating a budget, you're probably getting in and spending the exact same amount. What comes in and what goes out are the same, so they zero each other out. So you may not actually pay tax on the grant, but you still have to report the income that the slip tells you. So any granting body, whether it's federal, provincial, or municipal, is going to provide you with a slip for the most part. I'm more familiar with Ontario slips just because I'm here, but Canada Council provides a slip, a T4A, and so you're going to be getting these slips with the grant income. And if you don't put a slip on your tax return, the government's going to think you're hiding income. So you always want to be transparent about, oh, I made this money. I may not pay tax on it at the end, but you need to know that I made it and that I had some spent expenses against it. Cash payments, of course, everyone's like, it's cash, it doesn't count, but realistically, cash does count, and the government has a little place in your childcare where you can rat out your babysitter for not claiming income by putting your babysitter and what you paid them and their SIN number. No one fills that out because no one wants to rat out a 15-year-old babysitting their kid. But cash payments are income, and if you're getting cash, it's not a bad idea to be throwing it on there. First of all, it's what's legal, but also sometimes if we're making so little money, the cash payments can bump us up into different credits that we can get. there's a really great credit called the Canada Worker Benefit, which is worth about $1,200 for an individual. And that's eligible to people who are working, but not making a lot. So sometimes if you're working, but it's pretty dire, showing that extra money can actually bump you into a better refund. So don't discount cash. Tips are claimable. One day the CRA is going to figure out how to track serving, like restaurant tips, and they're going to come after the servers because they've already tried a couple of stings in, I think, St. Catharines to catch tips unreported. And, it's millions of dollars a year. They're going to want a piece of that, and they're going to figure it out. Investment income, obviously it's taxable. You've probably heard of the news all about the capital gains. The federal government proposed a new change to capital gains inclusion, which they've now rolled back because everything is in chaos. Most of that information is going to come to you on a T-slip, so you're going to get a T5 or a T3. There's not a lot you have to do with investment income aside from entering on your tax return. However, if you're investing in things like crypto, which is fairly unregulated, it's up to you to be reporting that income because you're unlikely to get a slip for crypto unless you are investing in crypto through a reputable organization like Wealthsimple will have crypto, and Questrade has crypto, I think. They would give you a slip, but other places won't give you a slip. And whether you're making money or not, you're responsible for tracking your investments in, your gains, your losses, and reporting on your taxes, whether there's a slip or not. So if you're not investing in a traditional manner, you still have to report it, but you have to do more math to report it because it's all up to you to figure out, as opposed to letting the bank figure it out. Remember that all those online sales are taxable. So people doing Patreons and they have ad sales, or they're getting their little sponsorship or tips from Patreon. I have some clients who do like live streaming on Twitch with their games, and they call them tips. It's taxable, those bits and bobs of money. Craft fairs, again, it's cash. If you have a website, ad sales, all taxable. A lot of these places now provide annual slips. Etsy, maybe not, but if you're getting ad sales through a website or through YouTube, you will get an American tax slip from Google with ad sales, that kind of thing. And so an American tax slip for that kind of stuff would usually come on a 1099 or a 1042. It's American, but if you're in Canada and filing only a Canadian return, the American income from these kinds of things has to go on your tax return converted to Canadian dollars. So that can be tricky. If you're selling on Etsy and it's all set up in America and the conversion isn't being done for you, you've got to convert to Canadian dollars. And the trick with earning income online is that typically Shopify and those kinds of places will take a fee for allowing you to use their service. And the trick with that is that when you're reporting the income, you need to be reporting what the item was sold for, not what you got. So if you sold a t-shirt for $10 and Etsy took 50 cents in order for you to use their service, you still report $10 made, not $9.50. You report $10 made, and then you write off an expense of 50 cents for paying Etsy. So whatever we sell a good for is what we claim as income, and whatever the fees are is separate. You can't claim I made $9.50 for the shirt and then claim the 50 cents as an expense, because you've kind of done that already by claiming $9.50. So always remember, it's your gross sales, whatever the actual item was sold for, and then you pay Etsy, Patreon, whatever, to help you make the sale. And one of the reasons this is important, besides the fact that it's factually correct in the eyes of the CRA, is a lot of artists don't succeed in making a profit in their business. I certainly don't as an actor. And the CRA will say, well, let's look at this business, and can they demonstrate a reasonable intent to earn a profit? Can they show that they're trying to make money? And so looking at our expenses can tell them if we're trying to make money or we're just a hobbyist. And most artists would be loath to be called a hobbyist. It happens, but the government can be ignorant and call you a hobbyist. But if your expenses say, no, I'm trying to make money, here's how I'm trying to make money. I'm paying Patreon, I'm paying Etsy, I'm paying booth fees for craft fairs, I'm paying all of these things to generate a revenue. It's a really great expense to show that you have an intent to earn a profit. If you have no way to demonstrate you actually are trying to make money, there's no reason why the government wouldn't call you a hobbyist. You need to be able to show through your expenses that I want to turn a profit here, even if I don't, I'm trying, by paying others to help you. So I'm an actor and I have an agent, and actor income is wild and crazy. And by the time we get the check, 3 different places have had their hands in it and various deductions have come, and we get much less than we were told we were going to get. I still have to report what I was told I was going to get, and then I pay my agent, and then I pay my union, and then I put money into RSPs and all of these things that are mandated. So even though I don't see the money, I have to report it, and then I get to take the credit of expensing those things in my expenses. But it's good for me because it shows that 1, I have an agent that I pay to get me work. 2, I belong to a union, which is a professional association that is seen as legitimate to the government in terms of intent to earn a profit. So I'm telling the story that even though my business is kind of not doing great, I still pay people, professionals, to help me get work. And that makes my business look reasonable. Remember that fundraiser income, if you're raising funds to make art, is taxable. If you are raising funds for a vet bill, not taxable. But be careful, it can be a bit of a gray area. But generally, if you're raising funds through a Kickstarter or an Indiegogo or any of those crowdfunding platforms to make art, it is taxable. Grants, as we talked about, they're taxable. The trick with grants is that oftentimes the CRA will want to review them. I'm going to quickly drink some water. So the main problem, specifically with Canada Council grants, is CRA mandates that Canada Council puts our grant income into a box called 105. So within a T4A, you're usually only going to get one amount in one box, but there's a variety of boxes we can use on a T4A. And typically, certain boxes say income and certain boxes say different income. So some of them are fees for services, and the T4A with the box 105, where the majority of people says scholarship income, because they use it mostly as a scholarship reporting slip. However, the Canada Council has to use the exact same box to report their grants as schools use to report scholarship income. And it's something that the CRA has mandated, and Canada Council has been fighting, and I've talked to the head of finance at Canada Council about it, and she says, we try, but getting CRA to move is hard. When we get a Canada Council grant, the income is in a weird box. And so we want to put it on our business statement, that T2125, and we need to be a bit more sophisticated in our tax knowledge to get it into that right form. It's an allowable thing to do. You're allowed to pop it onto your business income so that the income that you've made will tie to the expenses that you've spent against the grant. We want the income to tie to the expense. If we use box 105, the income would live in an entirely different part of the tax return. We want it to live with our expenses. So moving it to our business income is valid, it's alive, it's allowed. There's a folio about it in the CRA's archives, we can do it. However, CRA is still making it hard because of the way that they mandate granting bodies report the income. So just, if you're tending to get a lot of grants, it's a good idea to hire an arts accountant who understands grants, because grants are tricky. And as my last point makes, CRA will often review grants because CRA is mandated that the income go into weird boxes. They can never find artist grants on a tax return because it goes in weird places. And so you get a grant, 6 months later, you get a letter from the CRA saying, we see you got this Canada Council grant and we can't find it on your tax return. And even though you know it's there, you can see it, it's a huge chunk of money in your business income, they don't connect it because it's their own fault for making it very murky for them. So we often get review letters in the fall. We at Artbooks, get like 10 a week probably from September to January. They're really common. They're really easy to fix if you've reported the grant correctly. But people get a little panicky because you get a letter from the government, and of course you freak out. We all freak out. I still freak out. Just know that grants are tough if you don't have the right person supporting you and how to claim them. But if you're doing it right, CRA can still come back and say, we can't find that money. So just know that grants are a bit tricky, and do your best to advocate for yourself. If the government calls you, sometimes they'll call and say, oh, you put that grant money on that line, we don't think it should be there, we're going to move it for you. You would say, no, let me talk to my accountant because I know that there's a reason why it's here. Do your best to advocate for yourself. Is really, if you can't, if the government calls and is talking to you in a way that doesn't make sense because they're using tax speak, you're allowed to say, I don't really understand what you're saying. I'm going to get my accountant to call you, and then follow the steps to get the accountant to talk to them, because tax lingo, sometimes you need an interpreter between, you know, normal English and tax lingo, and having somebody on your team who can, your team being your lawyer, your accountant, whatever, who can speak tax lingo and then translate it into English for you. So you're making money. Just want to make sure everyone understands how to invoice. This is just a template that I pulled from Word. You can also use Excel. I like Excel because you can get the math formulas added in. They're just important things to remember when you're invoicing. Your name, who you're invoicing to. Instructions are going to be important. How do you want to get paid? People often send invoices with no instructions on how to pay them. So make sure you're including like e-transfer information or please send check to. Really important. And if you have HST, make sure you're including your HST number and the HST amount you're charging, all of those bits. And again, this is a template that I grabbed from Word or Excel, one of them. It took 2 seconds. It's a really handy little thing to do if you don't want to pay to have like a fancy software. You can find an invoice template, easy peasy, in any one of the MS, like in the Microsoft Office suite. Or you can pay for a good bookkeeping app. A lot of people use QuickBooks, and FreshBooks are basically the industry standard. They're both fine. They both cost money, increasingly more and more, I'm finding. I believe FreshBooks is Canadian, so I like them. Wave is also a handy app. And then I started out as a bookkeeper using Excel, because Excel is great. And once you've got it, it's free and super modifiable. And I used it for all of my income and all my expenses until I graduated to QuickBooks. So if you're looking to create invoices, any one of these is going to help you with invoices. And you can use it for expenses too. However, if you have HST, it can get a bit murky. So you want to be careful about managing HST within there. I'm not going to go into how to use these apps. That's a whole other workshop. But just know that presenting a decent invoice to somebody that makes you look professional, really, really handy. And then you have a report at the end of the year of how much money you made. So bookkeeping apps are great. We're going to talk a little bit about artist expenses. If this was in person, we would have a bit of a brainstorm together. I don't know what kind of art we're dealing with. Maybe people can put in the chat what kind of art people are practicing, so I can try to speak to that. So if anybody wants to pipe into the chat what kind of art practice you're dealing with, that'd be helpful for me. Let's go ahead. There we go. We've got some beadwork, workshops, and product. Anybody else? Music, excellent. Musician. Music, glass, that's cool. This is all cool. Anybody else? Okay, well, that's a good, so we've got visual artists and musicians. So this spreadsheet that I've got that I'm sharing is reasonable. This is really just a template of like, what could you possibly expense? And people often want to know about expenses. It's sort of the biggest question when it comes to tax, because we've all been taught about write-offs and they sound so exciting and they lower our tax bill, but what are they? And everybody's business is going to have different expenses. Everybody's business structure is going to make different things. So one visual artist to the next visual artist is going to have some difference in what the expenses are, but this is a general list of what kind of income you might have and what kind of expenses you might have. It's not exhaustive. It is just a suggestion of things that you could think about. You know your business, you know what your expenses are, but the government, that T2125 that we talked about, it's a very straight document. There's not a lot of room for like creativity. The expense categories that they use are pretty narrow-minded. So you might have to massage some of your expenses to fit into their supplies. It could be art supplies, or it could be bead supplies, or it could be guitar strings, depending. That's fine. So the various kinds of incomes you could have, as you can see, like rentals, in kind. If you're donating pieces of art, you might get an in-kind donation slip. You've got to report the income if you have in-kind donations. Various things like that. Expense-wise, from the top there, we've got rent. And so that particular rent, there's a schedule for it, which we're not going to see. But it's basically just, if you work from home, this would be home rent. The entire running cost of the home. If you rent, you'd be claiming your rent and your, maybe if you have tenant insurance and utilities, adding all that up together and then taking a portion for personal and a portion for business. And you want to be on the safe side with any kind of expense that has a tinge of personal. So rent, food, clothing, cell phone, anything where there's a personal usage, you want to claim only some. And with rent specifically, I encourage people to never claim more than 20 to 30%. Don't be aggressive with your house because you still have to live there and use the bathroom there and kitchen, and those are personal expenses. If you're renting a space outside of your home, like a studio, that's a different matter. You can claim the entire amount. With car, similar. Oh, and with rent, if you are an owner of a home and you're working from home, it would be the running costs of that. So that would include property tax and the interest you pay on your mortgage, as well as utilities and insurance. Automobile, kind of similar idea to a house, you claim a portion. So if you have a car and you're writing off a part of the car for business versus personal, you'd be writing off the maintenance and the insurance and gas and parking and that kind of stuff, but just a percentage based on your business versus personal use. You might have exhibition expenses. Business entertainment is a tricky category just because the name makes it sound like you're going to shows, but the government's version of business entertainment is networking meals. So this is a food only category, just food. Don't put anything else in there because food has to be reduced by 50% according to the CRA's rules. So we don't put anything that's not food into a category called business entertainment because you would lose half of something that could have been claimed at 100%. Travel for business, if you're going to a residency or you're going to play a show or you're going to source materials, travel expenses are great. So planes or buses and hotels or Airbnbs and local research to see, to go to the Corning Museum of Glass, that kind of stuff. All of those are good travel expenses. Capital cost allowance is a funky one. That's the technical term for buying a big ticket item that has value beyond the first day of use. So when we buy a computer for $2,000, we can't write off $2,000 in one go because that computer, you could sell it a year later for $1,500. There's still value. You've made some money. So when there's something that costs, say, $500 or more for an individual item, a camera, a computer, a digital printer, those kinds of things, we have to depreciate them over time. That's where you want to grab an accountant to help you with that kind of stuff because it's a bit fussy. But just know that when you're buying a big ticket item, you cannot write it off all in one go if it has long-term value. Something to think about. Storage rent, if you have a lot of art stuff that you put in storage, absolutely claim. If you're using a personal storage unit with partly personal, partly biz, again, not taking a portion. Transportation we talked about, but you could also claim, if you have Ubers or local transit or cabs for business, you can claim that. Art supplies and materials is pretty self-explanatory. Memberships and entry fees, those are union dues if you belong to a gallery that has a fee or you're paying to show at a group show or at a craft fair, entry fees. Photographic supplies, services would be things like printing. Research costs would be books or art, things that inspire you or that you need to create your work of art. Printing and promotional expenses. So that could be photographing your art for archive or for portfolio, making a catalog for your show, anything that can help you expand your network of people interested in your art. Exhibition opening costs and gifts. That could be, so gifts might be thank you bottles of wine or thank you flowers. Opening night exhibition costs could be having a reception at a gallery. And so, wine and cheese for 20 people, you would write off that, would be great. Accounting, paying an account, great expense, it's a write-off. Office supplies, self-explanatory. Postage and courier, also pretty straightforward. Casual labor could be subcontracts, or artist assistants, or if you're a photographer, hair and makeup, or if you are a band leader, you need to hire a session musician, that kind of stuff. Equipment repairs and rental, same thing. You are a photographer, you need to rent a different lens, or you're a musician and you need to rent a specific guitar. It's a business expense. Workshops and lectures, if you were paying for tonight, that would be a business expense. I think that enhances your business training, as opposed to like swimming lessons. If it's a business expense, it's a business expense. Sales commissions if you are paying a fee, like I do to my agent. So this is very broad. This is not everybody, but this is a rough idea to get you brainstorming about what you might want to write off. Somebody in the chat had asked about grant expenses, and grant expenses would go into these categories depending on how you've budgeted your grant. So you want your grant income to show up as income in the top portion, which would be the income side of the T2125, and then the corresponding expenses could get slotted into any of these categories, or you could have a line called grant expenses. Typically, I find with grant expenses, it's usually like paying artist fees or rental, that kind of stuff. It can be pretty straightforward. There's usually not a huge spectrum of grant fees, but they would just go in the same categories. You lump them together right here. So income for grant and expense for grant, they all go together. And as long as you've budgeted for it correctly with the granting body, there's no communication. The Canada Council doesn't talk to CRA to see if you reported your budget correctly on your taxes. There's no communication. You don't have to be worried about what the budget says versus what you actually did. Incorporation versus self-employed. Sometimes people will ask about this because incorporating seems kind of sexy and they pay less tax. And incorporation can be helpful, but it's a bigger endeavor and it's a bit more busy work and it costs more. So incorporations in Canada, small corps, the tax rate is 13.5% for the first like $500,000 you make. So it's quite moderate, and that's on the net, 13.5%. Whereas opposed to in the rest, as a sole proprietor, you're paying the federal tax rate, and the first bracket of that is 15.5%, and then your provincial bracket. I don't know what the Yukon's provincial tax rate is. Let me just quickly. I wonder what that is. Yukon. Does anybody
No,
know?
we just have the federal taxes here in the
You don't
Yukon.
pay provincial? Lucky you. So you're paying 15.5% for the first bracket, 20% for the second bracket, and so on. What that means is for the first $55,000 you make, you're paying the lowest tax, the lowest bracket, 15.5%. And the next 55 on top of that, you'd be paying 20%, and so on, increments of basically $55,000. So we pay a lot more taxes as a freelancer, but we're paying it on the net. And if we spend a lot of money in our business, we're probably generally hovering in that first bracket. And when you incorporate, any money that you take out of the corporation to live off of, taking money out of the corp to pay your rent or your mortgage or hospital bills or vet bills or clothing, is still taxed at the personal rate, because money coming out of the corp is being taxed to you personally. So if you need money to come out of the corp to live off of, you may not be saving money by incorporating, because whatever you're taking out is still being taxed at the normal rate. However, if you do perform an art that could hurt somebody, or your services have the potential to cause injury, you might want to have a liability, to have some arm's length to your business. For instance, I have a friend who's a personal trainer, and they incorporated very early because they could hurt somebody, and that person could sue them and take their home. So if you have assets you want to protect, you would incorporate. However, knowing that incorporating, typical cost for an incorporated tax return is about $3,000 plus bookkeeping, as opposed to tax filing as a sole proprietor. I know that in Ontario, you're going to pay to see an arts accountant between $400 and $500 for an arts accountant. So it's a significant difference in cost. So just bear that in mind if you're thinking of incorporating. It's not a small step to take. You have to be really careful about pulling money out. So if you're going to incorporate, talk to an accountant first to make sure that it's the right fit for you. HST. Everybody has questions about HST. We've all heard the fear around it, because why would the government make us tax collectors when we're artists. But, and I'm saying HST here, you guys, I think it's 5% GST where you are. The government has decided many years ago that if we're making more than $30,000 gross from our freelance income, we are a successful business. And as successful businesses, we are required to become tax collectors, which it's a pretty arbitrary number. It's like that 10,000 steps you walk. It's arbitrary. 30,000 seems like you're successful. We know that nobody can live off of 30 grand, especially when it's your gross and not your net. But that's what they've decided is when you need to collect HST. And when you're making that kind of money, they also assume that you're a business who knows what's going on. And so there's very little guidance about HST. You don't get a lot of mail telling you what they want. It can be tricky. Just know that as soon as you get close to $30,000 of income, you can call them. The number is on the screen, and ask for an HST number. When you call them, they're going to ask you, have you hit 30? Are you going to hit 30? What have you made in the last 4 quarters? So they're going to want you to have your income sorted for the last 4 quarters, consecutive quarters, and see if you've hit 30 at any time in there. You really don't want to miss your deadline, because they will say, oh, you should have had HST, GST 2 quarters ago. And so we're going to give it to you effective 6 months ago. And then they want you to go and try to get the HST from everybody that you've invoiced for the last 6 months, which is, it's not a fun task. I've had clients have to do it for 2 years because the CRA assigned them an HST number 2 years prior. They get retroactive to 2 years. And that was not a fun job for that client to go back and hat in hand and say, hey, would you mind? Most people didn't give it to him. So you want to make sure that you're before the 8 ball. Is that a saying? I don't know if it's a saying. You want to make sure that you're ahead of the game when it comes to HST, and call them before they decide to call you. It's no fun to try to collect HST from people who've already paid you. If they are a corporation, their fiscal could have closed, they don't have the money to give to you. Once you've got the number, you are required to collect HST on anything you do that is providing a good or a service. And from then on, so even if you have a really bad year where you're not making any money, you're still charging HST on the money you are making. It's not optional to opt out until, if you're really not making money year over year, you can close your HST account. But if you register in 1 year because you made a lot of money and the next year it's very quiet, you're still collecting HST, you're still remitting it to the government because they make you, but you don't get to opt out for bad years. You can have to opt out if you are closing your business, or if you're just like deciding not to put as much steam behind your business and don't plan on making more than 30 grand. The trick with HST, now that we've got the number, is that we never spend it because it's not our money. So oftentimes people will be like, wow, my check is so much bigger. I collected the extra 5% and I'm making more money. HST is not your money. They consider it a crown debt. They are very inflexible about it. Whereas you might get some leeway or some compassion from the tax department. The HST department has no leeway, no compassion. It's cold hard facts with them. When you get the HST, you put it aside. I put mine in a TFSA, and then every quarter, whatever's in that TFSA, I send to the government. So I basically prepay my HST based on what I have in my savings account. Every time I get a check from freelance work, I put aside a third, which incorporates 20% for tax and 13% for HST. And then once a quarter, I send 2 payments to the government for the HST and tax, so that I'm prepaying my income tax and my HST along the way. So that at the end of the year, theoretically, I've paid everything and they can't complain, and I haven't spent the money by mistake. So even if I'm, in credit card debt, my tax money is saved, because credit cards love to make interest off you, and the government does not want to make interest off you. I'd rather feed the government and get them out of my hair, deal with my credit card debt as best I can. It seems silly because credit card debt is much higher than government debt, but the government will make your life unpleasant if you don't pay them. So HST, you always put aside. Tax, it's good to put aside if you think you're going to owe. And then the one small mercy of HST is that you get to keep the HST that you spent. So what that means is all of these expenses that you might have in this area, there's HST probably spent on a lot of that stuff. You're going to pay HST on art supplies and research, all those bits and bobs. There's tax. You get to keep that. So I make my $30,000 for the year. So I've put aside $3,900 of HST, saving it to give to the government. But then in the course of running my business, I've got all these expenses. I take the HST out of the expense, so it no longer lives on my tax return. I just take the expense. I bought a pen. The pen cost stays on my tax return. The HST on the pen lives on my HST return. And I give the government the difference between what I collected and what I spent. And average artists are going to spend maybe even $1,000. This is Ontario, so maybe in Yukon it's maybe closer to $500. But tax adds up on your business, and whatever you collect, you give minus whatever you spent. So if you collected your $1,300 in HST and you spent $500, you get to keep that $500 to give them the difference. And that $500 is yours, tax-free. And you've kind of forced yourself to have a little bit of a savings account by saving your HST, so that in April you've got a bonus $500 that you can then invest, put into savings, buy yourself a treat. So HST can work out okay. And I do find that with visual artists, a lot of the time you're spending a lot. Art supplies are expensive, and your HST can end up being quite high, especially if you are ordering from outside of Yukon and you're ordering from Ontario. You might be more HST there. We don't pay HST on American goods. Sometimes if we're importing something from the States, it'll get stopped at the border and you have to pay a duty. That's typically a GST, HST adjustment to account for not having paid the tax when you bought it here. All of this sounds complicated and it is a bit fussy. And I think that it's really important to have somebody on your side who understands this and can help you. If you don't want to hire an accountant, you can call the government. The CRA, we pay tax. They have a phone bank of people just waiting to help us. The last couple of years have been really hard to get through to them because there's not as much staff as they would like. But calling off season to get help, it's free. They're generally pretty decent people there. I find a lot of people I deal with at the CRA are quite lovely. And they can answer those questions for free. The website is also chock full of really good information. So using your CRA, using your Google to just Google, I usually just put CRA-X, CRA medical, what's a medical expense, CRA estate tax. You'll get to the right page in the canada.ca website specific to CRA and the subject you're looking for. And they do a good job of writing things in layperson terms with examples that make sense. So don't be afraid to ask questions. If the government sends you a letter that doesn't make sense and you're afraid, call them back and say, please explain this to me different because I don't get it, and they will. If the person that you call is unfriendly or unhelpful or being obtuse, you can just hang up and call back. You'll get somebody new. And unlike, it's free. It's free help. Accountants are expensive, but the government, we've paid tax to have this group of people help us. So use it. Use the website, use the people. If you are planning on using one of the online tax softwares to do your taxes yourself, which some people will tackle, just know that with freelancers, that the accessing the freelance area of a tax return via those TurboTax and new files is a little bit more circuitous. So you need to have a sense, you want to remember that term, the T2125, because you want to get things onto that schedule. I've seen a lot of people filing tax returns and they come to us the next year with a copy of what they did last year, and I look at the return and the income is in weird places and the expenses are in weird places, and none of it really lines up because they use TurboTax, which it's not designed for sophisticated tax. And so they've done a weird return. Oftentimes the government doesn't catch it or they don't care because it's weird, but you want to do your best to help yourself by telling the government the story of your business. And I like to use that idea of telling the government the story. We want to think year over year, what is the story that I am telling to the government so that they understand my business? As part of filling in the business statement, one of the things we have to add is a 6-digit industry code as defined by Industry Canada. And the codes are narrow. There are a couple for artists. There's like a visual artist and a performing artist. And there are some. I think if you're working in more techie fields, there's less options. But you have to provide an industry code. And now that everything is algorithms, when we transmit a tax return to the government electronically, that there are algorithms programmed to look at that code and then make sure that the expense categories that we're using make sense. So we pop in visual artist, and then all of our expenses are legal fees. They might be like, what is going on here? Where are their art supplies? You want to make sure that the code that you're saying you're doing makes sense to the expenses. And with artists, it's harder because we have oftentimes odd expenses, and trying to fit our expenses into their terminology can be hard. But remember that you're telling the story of you and your business, and try to tell the government a story that seems like you're legit and you know what's going on, and you make sense. That's all we can do at the end of the day, is try to like help them help us understand us. That's tax. It sounds nicer than it is. It's really just math, but telling them the story is part of the battle here. So we're at, I guess it's 7 o'clock where you are, and I wanted to do a pretty good Q&A. So we're going to switch to Q&A. I'm going to stop the screen share so I can see people, and maybe we can have a little look at the chat and see if there's anything in here specifically, because I think that there was.
Yeah, somebody asked if you need to be incorporated when you make more than $30,000.
So no. So incorporation is for people who are making a lot of money. The idea with incorporation is I'm making too much money, I can't spend it all, which is why I want to keep it in the corporation where I'm paying less tax, because the minute I take it out for personal use, I'm paying more tax. So people who incorporate typically incorporate when they're making $200,000. Like you have to, if you were to incorporate at 30,000 and you're paying $3,000 just for your accounting fees, it would be bad, right? 10% of your income going to accounting doesn't make sense. You incorporate when you can't spend the money that you're making. Sole proprietors, we're using that money to pay our housing costs and our car costs and our vet bills. We need the money. It's in our name. But incorporation, the money is not in our name. It's an arm's reach. It's arm's length organization. And taking it out makes it our name. But we want to keep money in the corporation as much as possible. You need to be making a lot of money to make it worthwhile to set up all this stuff and to try to live off of a corporation. Does that make sense to Lori? Hopefully. Let's see. We've got some new. TurboTax, where would you report expenses like paying bandmates? Okay, so Laura, you've got some questions here. If you're using TurboTax or using one of those softwares, what I was saying about the T2125 is that the categories are fairly staid. They're a little dull, and we have to find a way to articulate what we're doing in a way that makes sense. And so there's no line item for band fees, but if you're running it as a business, the T2125, if you have it as a business, there's an option for subcontracts, and that's where usually we would put bands. So filling in the T2125, paying band members, I would call them subcontractors, and there's an option for that on your T2125. Let me just, maybe what I'll do. Open up a T2125 and I'll screen share real quick to show you. Oh, I don't want to do that. I will show you what the categories look like. So we're going to do a quick screen share. So we'll do. How do I do that? I guess we'll do this and we'll go here. You can see everything. This is a T2125. When you see it through TurboTax, it's not going to look quite the same. But the part that we're worried about is your expenses, which is this part here. And so we have a place for, it's called the cost of goods, so the cost of making your goods, and there's a line for subcontracts. Typically don't use direct wage costs because that triggers an idea of running payroll, which is not something you plan on doing as a sole proprietor, so don't. We would use subcontracts. But this is generally what the expenses look like, and they're very straightforward. Advertising, bad debts, insurance. Make your expenses make sense to these categories, and then you're fine. So at Artbooks, we do our own business statement because we want clients to feel like
they have some autonomy and that their business makes sense to them. Then it's up to the preparer to take their expenses and mash them into these categories. We want the client to understand their business and not have to worry about the government speak that we have to worry about as preparers. So,
Tova, if it's Ellery here, if I may, just on that screen, in section 4, there's also a section for professional fees or other, but you would recommend, if paying musician professional fees, to put them in section 3 under subcontracts. Did I understand that right?
Yeah, I mean, to me, that's where I would put it. Professional fees, it says legal and accounting. That's where I put legal and accounting. To me, that's the government doesn't see artists as professionals. They see them as a business. It's a weird thing. I think I'm a professional actor. They say I'm a business of acting. So as an actor, I may have a business, but as an accountant, I am a professional. So does that make sense?
Yeah, I think so.
It doesn't really, it's all just apples and oranges. And if the government doesn't understand it, they can ask you to clarify it. But typically, when we're dealing with small businesses, which most of us are, there's not a lot of questions about our expenses because we're giving them very little tax. We're not big business. They don't care so much. A lot of people will get review letters in their life, but they don't get audited. And people get afraid of review letters because it's the government sending a question about their taxes and they think they're being audited. But the review letter might be things like, show us your medical expenses or show us your charitable receipts. An audit is, we want to see all of your bookkeeping for the last 3 years, and it will take them 3 years to go through your information. So an audit is really it's like a multi-year project, and a review is like they want an answer in 30 days. They'll get back to you in 30 days. It's a quick one and done. And so spending too much time worrying about where expenses are put on that form, if it makes sense, if it fits, it fits. Do your best. They're not going to, if you're claiming the income and you're claiming the expense, you're not doing anything wrong. If it's in the wrong line, it's still the same bottom line, but tax-wise, what you might owe. Okay, let's see. Got a question from Janet. Curating in a group art show, and I invite artists from outside of Canada to take part. Are there any things I need to know about paying them? I pay them the same way I would pay Canadian artists in Canadian dollars. Yeah, I mean, this is about them reporting their taxes in their foreign countries, which I can't answer. So if you're offering them an artist fee, you would provide it in Canadian dollars, and they have to do whatever they have to do in their own country. So it's not really your problem. If you're going to give them some money, you would treat them as if they were here. You would give them their Canadian dollars, and they have to deal with their own taxes. You don't have to worry about that. That's their worry. What are the tax implications for artists in Canada earning below the $30,000 limit? There's no problem earning less than 30. It means maybe you don't have as much money as you would like. There's no tax implications. You're going to owe tax. If you're making 30 or less, you're still going to be paying tax. You're going to be paying CPP. But the government's not going to question why you're a business. Repeated business losses, they might question. So if you're making losses year over year, like your gross is 1,000 and your expenses are 5,000, so every year your business is losing $4,000, there's going to be issues. They might wonder, then, are you a hobbyist? Because where's all this money going to a business that's not succeeding? But as long as your business is making a profit, it doesn't really matter if it's $10 or 30,000. Hot tip for anyone who's called us here and isn't aware of this: the dedicated telephone service for territorial residents. I did not know that, but there you go. You guys have your own phone number. That is very lucky. You've got to have your phone number in the area code with the territory as well. People are helping each other here. That's very cool. All right. If an artist exceeds $30,000 limit in 1 year, what steps should they take to ensure proper tax filing? I mean, the income doesn't matter what you're making. The tax filing is the same. 30,000 threshold is really just something you think about for HST. Tax is tax, income is income for tax, doesn't matter. if you're making 30,000 and you haven't registered for an HST number, you need to do that right away. But otherwise, your tax return doesn't change whether you're making $10,000 or $100,000. It's the same. I hope, Rashid, that answers your question. It's nothing to, like, don't get fixated on $30,000 of income as a tax thing. It's just an HST thing. And bear in mind, something I didn't mention before is that 30,000 of gross freelance income doesn't include grants, because grants, you're not selling a good or a service. So if you're making $100,000 in grant income, you're not necessarily required to have an HST number, but the government will probably call and say, where's your HST number? Which you would say it's grants. Grants are so commonly misunderstood by the lower levels of CRA agency. You always kind of want to get to a senior up if you're having a problem with a grant. But just know that grants are not part of that $30,000 calculation when you're worrying about HST, because granting bodies don't pay HST. They're not, it's an exempt supply. And you only collect HST on things that you sell or services that you provide. A good or a service tax requires a transaction of sorts. So $30,000 would encompass any kind of fee for services or goods, but not grants. All right. Any more questions in here? People want to put on their mics. They can also just ask questions. Who would you recommend booking a filing meeting with at Artbooks? Ideally, someone who knows about territorial grants and how to report them. At Artbooks, we're all in Ontario. So probably nobody knows specifically about territorial grants, but if they're the same as any other provincial or territory, like if it's the same idea behind an Ontario Arts Council grant, we handle grants no problem. Anybody at Artbooks knows about grants. We're grant experts. And I've definitely done taxes for people in Yukon. I think it's just Yukon. Yeah, grants are not, doesn't matter where they're coming from. It's sort of the same tax treatment.
Somebody have raised their hand. I think it's Maria Rose.
Go ahead.
Hi, I just had a quick question.
Sure.
What if you had an asset that is worth $30,000, but it isn't something that you, how do you categorize that? So if you got something that was worth $30,000 and half of that was from a grant, like so half of it was paid from a grant.
Doesn't matter.
The other half. But, sorry?
Doesn't matter how you paid for it, right? That part's not. Let's use the example of you bought a $30,000 violin, just so that we have something to talk about, because violins can be that expensive. You bought it, doesn't matter how. It's now an asset in your possession, right? That's kind of what we're trying to figure out.
Well, I'm just wondering, like, so in theory, if I bought this violin and I got a grant for it and a loan, right? And then I'm paying this every month, but a part of it was a grant. How do you have to file that, or how does that work? Because you don't have like a registry number for the violin. Would that be considered that? Would that be considered that you're making more than $30,000 because you have something of great value?
No, income is income. Assets are assets. They're different. It doesn't matter how you bought it. So if you bought the violin and Canada Council gave you some money to do so, and then you borrowed some money to do so, the violin is yours. Doesn't matter how you paid for it. So the part of the income is separate from the cost of the expense of the violin. So I got a grant, I'd report it as income. What I've told the granting body I'm going to spend that money on is between you and the granting body, not you and the government, and not you and the CRA. So they will never know that you specifically got a grant to buy this thing, unless they were to do more questions. But I don't see that happening. The thing to think about with grants, can I ask what granting body helped you buy the thing?
No, I'm just
speculating.
No. I guess I'm just curious, like, so because if that money would have gone through the account for this violin, in theory, then
that would show up, right? Because then there's like, when you go into your CRA, there's like a number that shows you how much money has been moving through you as a person.
No, Siri doesn't track your
So-
bank statements. Is that what you're thinking?
I'm not sure. I'm just wondering, like, so like I make less than, and thank you for taking up this time. This is a really tricky question for me. Like, so like I don't make 30,000 doing what I'm doing with my small business. I'm getting closer, but I'm not there yet. But I have something of, if I had something of value, like a violin that was $30,000, does that mean then my business would be worth $30,000 and then I should be registering GST?
No, because you didn't make $30,000. The buying of an asset isn't the same as making money. So
Okay.
you didn't make 30 grand. You have an asset worth a lot of money, but it doesn't mean your business is like, I can see where you're saying that there's an asset now that your business has value, but it's not the same as selling a good or a service, which triggers HST issues. So
Okay, one more question. So what if I use that violin to then go make money?
Great.
Then, well, well then, like, how does that change? Does that like make? I'm a little bit confused here. Did you see? Maybe.
Yeah. Then we talked a little bit about how I wasn't going to get too into the weeds of specific tax questions, and I think you would want to hire an accountant. Like, I just don't want to give you tax advice without knowing more information, and I don't want to take up the time of this workshop that's for general questions with something that's
Absolutely.
very
Thank you.
specific. So just know that if you have an asset, it is accounting. In our books, we have income, expenses, assets, and liabilities. You have income, which is separate from assets. You have expenses, which can be the same as this asset. Assets are treated differently, and if you're going to invest in something that costs $30,000 and you want good tax treatment on it, hire an accountant. It's expensive, but it's worth it, because it sounds like whatever it is complicated, and you might need time to sit down and I think you just need personal advice on this. I'm sorry, I just don't want to, it's too vague for me to give solid advice. Is that okay, Maria?
Yes, absolutely.
Super.
Thank you.
Okay. Alrighty. People are looking for local accountants. I wish I could help you, but I don't know accountants in Yukon. And remember that the help of the CRA to ask questions, like maybe for Maria, is a good question. Some of the things that I find that cause me concern when looking for an accountant is people crowdsourcing on Facebook, and they're asking who needs an accountant or who knows what HST is. And I see a lot of, I call it tax broken telephone, where people ask a question that makes sense. When do I get an HST number? And the replies are many, and most of them are like 80% correct and 20% wrong. And I just see a lot of misinformation being passed through social media. I mean, there's a lot of misinformation on social media about everything, but just beware that if you have tax questions, just know that people might have a good heart, but they might be remembering what their accountant said to them a little wrong. And so that what they're telling you might be sort of twisted from what their accountant told them. Take tax advice on social media with a grain of salt. And if you don't know if it's right, call the government, call CRA and just confirm. I started doing tax terrified of calling CRA, but I call them like on a weekly basis now. There's so much information, and I always say, like, if you're confused, get the information from the horse's mouth. Like, just get it from the people who are going to be calling the shots on what you're saying. Make it easier on yourself. It's hard to call them right now. April is hard to call them. Don't call them in April. But if you have questions now, it's February. Giving them a call in advance can be really, really helpful, and it's free. Use their website, and just be careful about Facebook. You know, finding an accountant might be a thing to do, but don't do tax advice on social media if you can avoid it. Any other questions? We've got 10 minutes. You don't have to have other questions, but everybody's very quiet. No?
I see people are writing. April is writing right now.
All right. Okay. Rashid's sort of following up with the answer that if I clicked on my invoice without you. Okay. So Rashid, your income and your HST are separate, as we've talked about, and $40,000, if that's your gross income total of your receipts, that's your gross. And like we talked about at the beginning of the meeting, your gross is part of the income tax return, but the net is what you pay tax on. So it's your income minus your expenses. If you don't have any expense checks. Okay, what? Do not have any expenses checks. The amount was taken for expenses. Sorry, Rashid, I don't really understand your question. Do you want to unmute yourself and try to ask it? Rashid, do you want to try to ask that question verbally? It's not, I don't quite follow what you're asking. So I can't quite answer it unless you want to, there we go. Speaking personally.
I'm not Rashid, but I think what they're saying is if they have invoices for $40,000 that they made, but then yet part of that $40,000 is also money that they're paying for the things that whatever their business is, but they don't have all of their expenses in checks to show what they paid in expenses. Will that be taken into account to have to pay the taxes of that $40,000 because they didn't do their accounting?
Still a bit convoluted, but I'm thinking maybe checks, you mean receipts? You don't have the receipts? I'm going to answer it as if checks means receipts. You've made $40,000. You spent part of that money to run your business. You neglected to get receipts. Is that roughly what we're talking about here? I think that's what we're talking about here. If you don't have receipts, you are leaving money on the table because the government wants receipts. They want you to keep them for 7 years. You have to have paper trail. It's really important that you ask for receipts at all turns. If you're hiring subcontractors, get them to invoice you, save your digital receipts in a folder, get your receipts. If you don't have receipts for your expenses, but you have a credit card statement, you can still claim them. If you have a paper trail of some kind, you can still claim them. However, if you have no paper trail and you paid in cash, it's tougher to claim things. So keep your receipts, keep track of your expenses, because that's what causes you to pay less tax. So you don't have to pay tax on 40 grand, you can pay tax on 30 grand if you have your paper trail in order. Hopefully that helps, Rashid. Larissa's been using H&R Block. Yeah. So H&R Block is hit and miss. I'm glad that Larissa's got a good in. I took a course there and it was really, really helpful. But the way that H&R Block works, at least in Ontario, is that you take a course there and then they want to hire you, but you've only taken one course. And that first course is very much like how to enter a T4 and how to add childcare. It's very basic. And you don't really get to, and then you just get assigned clients. And if they don't understand your tax situation, they're kind of just forced to learn as they go. And then you take a new course the next year that teaches you about new stuff. And then the third, you take a new course. So you're learning more and more, but not all in one go. You have to wait a year to get more education, more information. So if you've got a good preparer at H&R Block, great. The person that taught me at H&R Block was great and smart and knew her stuff. Just, I've heard horror stories with every accountant. I'm sure people don't like me. That, you know, accounting is stressful because it's people's money. But if you've got a good person, if Larissa wants to share her tax expert, she should do it. Because there's a reason why H&R Block is successful. They do good work most of the time. But just beware with artists, because artist income and H&R Block don't always go together. And there we go. April, CRA's liaison officer, super, like what I'm saying, use CRA. They offer a lot of good information. We pay them. They should help us. Rashid, thank you. Receipts, we got it. And yeah, so Liberty Tax, same thing. I mean, the thing about an accountant is that you either mesh with them or you don't. And if you mesh with them, great, and stay with them forever until they retire. If you don't mesh with them, find somebody else. Treat your business like it's a baby. Take good care of it and have somebody on your team, legal, accounting, whatever, who values in your art and trusts and like wants to help your art form is all I could say. And then Jesse mentioned that the expenses should tell the story of intent to earn a profit. Typically, one does an artist start filing as a small business artist, considering that in the beginning, the expenses outweigh the income. So people can start filing as a business as soon as they have intent to earn a profit, even if they're making no money, if the expenses are small. The government generally assumes that most new businesses are going to lose money for the first 3 years, and then they want to see some profit. So when we have new clients who are just starting out, we will allow a loss, a business loss, where the expenses outweigh the income for a couple of years. And after 3 years, we say, no more losses, you need to show some profit, or you're raising some flags. We really try to get our clients on board with the idea of, if they can't show a profit after 4 years or 3 years, we just try to keep the expenses to the bare minimum so that we're not making big losses. So, and certainly when the pandemic hit, a lot of industries performers lost their income immediately, and a lot of artists who used to have good profits lost money, and nobody had a problem claiming losses in 2020 because we were stuck at home, and some people were able to work from home and still, make their art and make money, and musicians and theater artists could not. And so they ran losses, and that's okay. Like, there's a story there. The world shut down and we couldn't leave our house, so we lost money. But we just want to make sure that we're not running aggressive losses for too many years in a row, because then you get into the question of hobbyism. And every artist that I've talked to who's had an inquiry from CRA saying, "Are you a hobbyist?" has been very offended at the idea that they might be a hobbyist. We're not hobbyists. And if you are a hobbyist, you wouldn't be doing all this expensive tax stuff. You wouldn't be paying an expensive tax preparer to do your taxes unless you wanted to be legit biz. So if you don't want to be a legit biz, then don't worry about this stuff. But if you want to be legit, just tell them you're legit. All right, I think I've got time for one more question. Maybe you guys all want to go and watch a hockey game. Who knows? Anybody else? Maybe we're wrapping up, and that's okay. Oh, you're welcome, Jesse. You guys have been great. You've asked good questions. I hope that you've learned something. I think the biggest takeaway is, you're filing on time, you're paying on time, and don't be afraid of the government. For the most part, they're nice, and if they ask you something that you don't understand, just ask them to reinterpret it in layperson's terms, or hire an accountant who can help you. There is help available. It might be expensive, but it is also a write-off. So there you go. I'll pass it back to Maria Len.
Thank you so much, Tova. Did you ever consider to move to the Yukon?
I like the cold.
It would be great.
I'm sitting by a fire, which is why I'm kind of busy, because I'd have to be by the fire to stay warm. So, but we do remote talks at Artbooks, so you can always reach out. We do all of our things by Zoom these days.
Thank you so much. It was very helpful. And again, it was this workshop was a collaboration between the Yukon government and CARFAC. Thank you. And happy tax filling, everybody. Tax season.
Happy filing, everybody.
Yeah, and if we recorded the session, it will be available on Yukon government website for a period of 2 years. If you want to watch it again, then if there's stuff that you missed. So thank you, Tova.
Thank you very much. Thank you to you, Mary-Ellen. Thank you to April, if she's still here. Thank you to all the participants. I hope you all have great tax returns this year.
Thanks. We'll think of you.
Excellent.
For sure.
All righty.
Bye-bye, everybody.
Bye.